Welcome once again. So we'll be looking at value-added tax. We'll be looking at two different sections in this particular segment. So first and foremost, what I want to say is that we'll be looking at the two chapters of the core text. Okay, two chapters of the core text. And so principally we're dealing with chapters 29 and then chapters 29 and 30. Now, this particular segment will be focusing on chapter 29, and then the next section, the next presentation will look at chapter 30. For chapter 29 of the core text, we're looking at the VAT rates, which are principally into four groups. Normally someone will say three, but four. Of course, we have the standard rated, reduced rated supplies, and then zero rated. Of course, then we have the exempt supplies. Now, we also talk of the documentation process of the value-added tax. So we're looking at the registration, when is it compulsory and when voluntary to register, and the deregistration in terms of threshold and then any processes, and then who are exempt, and then we can also look at group implications for VAT. Okay, group implications for VAT. Now, the question is, what is VAT charged on? Okay, so VAT is typically looking at three key items over here. So first, we're looking at the taxable supplies of goods and services. In the UK, we are dealing with UK jurisdiction, okay? Then we're looking at taxable persons and then business, cost of business. So we are typically interested in what a taxable supply means, what a taxable person is, okay? And then what is considered to be the normal or ordinary cost of business that a company runs or the organization runs. Okay, so these are the three items which will underlie the discussion of VAT, and typically it works through in all discussions of VAT, whether in the UK jurisdiction or in any other jurisdiction. Okay, but once again, we are focusing on UK economy. So everything we are dealing with now deals with our UK economy. Now, what is a taxable supply? So we're dealing with simply any goods or services which are made in the UK, except exempt supplies. So taxable supplies are normally the VAT exclusive value of three different items: the zero rated supplies, standard rated supplies, and then reduced rated supplies. So for taxable supplies, it will fall under three categories: zero rated, standard, and then the reduced rated supplies. Okay, so we know what taxable supply is: any goods or service that we render or provide in the UK, except those which are exempt. Now, the types of supplies, we'll look at the three categories, but let's look at the type of supplies that fall under those three different categories of VAT rates. Okay, let me put it that way. So we have the standard supplies, standard rated supplies, and they cover most of the goods and services that we trade in. Okay, we also have the reduced rated, and they are usually the fuel and power for domestic and charity use. Okay, not for the ordinary course of business, okay, for domestic and charitable use. We're also looking at children's car seats, okay, children's car seats. Then we look at zero-rated supplies, which are normally non-luxury food items, books, and then children's clothing and footwears. Then the last aspect, which is normally not chargeable to VAT, are the exempt supplies, and they normally cover the health services. Insurance will also fall under this. Okay, so we normally would consider insurance to be anything in line with health and the safety of the person. Okay, so health services. Then we're also looking at burial and cremation services. So these are exempt from VAT. Okay, so these are the types of supplies that we can consider. So in any case that we deal with in terms of computations, analysis, let's try and see where these products and services fall into. Again, we'll normally indicate whether this is a standard rated supply or a reduced rate. But let's also dig deep in our readings and our discussions to know which product fall under which category. Okay. Now, the value of a supply. Normally, the value of a supply is looked at using the base value, the amount or the price prior to the charging of VAT is what we consider as a value of the supply, okay, of the taxable supply. So it is the amount on which we compute our tax. Okay, let's take a typical example here where we are saying that a product is priced at 1,000. This becomes the base, okay? The base or the nominal value on which we will have to compute our VAT. And the standard rated supply of 20%, okay? So this 1,000 is the value of the supply. And upon this, we compute our 20%, giving us what? 200 pounds. This is the VAT component which we levy. So the total consideration then becomes 1,200. There are situations where you'll be given only the consideration and you must find the VAT component. Now, if you are given the consideration here, remember your prior discussions on or knowledge on markup and margin, okay? Markup and margin. Okay, markup and margin. So if you want to convert, if you want to find the VAT component of this, then simply remember how to convert your markup to margin. Now, 20% simply means what? 20 over 100. You will agree with me that 20 over 100 is the same as 1/5, right? So if you want to convert this using our markup and margin knowledge, we simply will get what? Our numerator standing alone, yes, and then our denominator will be +1. So we end up getting 1/6. Okay, so if we are given a consideration, once again, remember how to convert our markup to margin and vice versa, okay? And then we'll simply apply our 1/6 of the 1,200. And this will give us a 200, which gives us the VAT component. So if you have the consideration and it is a standard rated, even if it is a reduced rated, you can still do your computation, okay, and check what you get. Okay, so if it's a reduced price of 5%, 5 over 100, okay? If you want to find the other one, you can easily convert it, okay? You can easily convert it. So try and see. 5 into 100 is what? 20. So you still get 1 over the 20 plus 1. Okay. So that I get 121. Okay, 121. I hope my writings are clear enough. Okay, so either way, but normally you will see these computations. Typically, I've seen questions restricting it to the standard rated supplies, but just remember your markup margin knowledge and then use it to apply for this. Okay, let's proceed. Let's proceed. So cash discount. What if I receive the cash discount or I'm offering a cash discount to the customer? Usually take off the discount from the amount before you apply. So if we are having 1,000 as the value, okay, not the consideration, and we're offering a discount of 10%, which will give us 100. To apply the VAT, it should be our 1,000 less our 100, getting 900. So it is on this value that we apply either our standard rated or our reduced rated percentage VAT on it. So whatever there is a discount effective this date, okay, effective this date, we're considering this from 1st April 2015, less the discount before you apply your VAT. So an example, a typical example, we have a rated supply of 4,000 plus VAT. If a 3% discount is offered, that a customer should be able to pay within 30 days and take advantage of the 3% discount. The question is, what would be the value of the supply if he pays within 30 days? If he doesn't pay within 30 days, what would be the value of the supply? Okay, so the same scenario from what I said in the earlier slides, we can get it here. So first, I'm able to take advantage of the 3% discount within 30 days. So 3% out of 4,000, okay, the net figure gives me this. So it is on this portion that I apply my 20% to give me this. These are consideration, okay? These are consideration. So you can still do a simple work backwards to find out. And if you follow my voiceovers, you would have seen if you want to typically find what this 20% consists of. Okay, so the 20% of the 3880 gives us 776. The consideration therefore becomes what? This 776 plus the 3880 giving us this amount. But if I don't take advantage of the discount within the 30 days, what does it mean? It means my taxable supply, the value of it will still be 4,000, and I apply my 20% of it, giving me 800. So the consideration becomes 4,000 plus 800, giving us the 4,800. Okay, 4,800. Now, who is a taxable person, or what is a taxable person? So the taxable person could be an individual, a team of guys, partnership, or a company, or any other body, any other entity which supplies goods or services in the course of business. So profit motive is not key over here, whether for profit or not. Once you supply goods in the ordinary course of your business, you qualify as a taxable person. Taxable person is the person making the taxable supplies. And this is a person who should be registered for VAT. Okay. So registration relates to the person, not an individual business. So all turnover must be aggregated per person. Okay, per person. Good. Now, a business, like I said, no need for profit motive to exist, whether for charity or for profit. It doesn't matter. Once we are running the business and whatever the supplies we are providing is in the ordinary course of business, it qualifies to be seen as business for which VAT should apply. Now, who must register? Who must register? Registration applies, like I said, to the person, not the individual business. Okay, so all turnover must be aggregated per person. Therefore, this person must register if their taxable threshold supplies exceed a threshold of 85,000, effective from 1st April 2017. It was frozen in the period 1819 and then 1920. Okay, hopefully, perhaps they could revise it in 2020 to 2021. But currently, we still will be using these figures for now until otherwise. Okay. Now, taxable supplies we are saying is the VAT exclusive value, which we have already computed in the previous slides. Okay, we looked at examples where we have the VAT exclusive values. Okay, value of the supply of all 0 rated, reduced rated, and standard rated. Okay, so where we know the reduced rated rates, and then the 5%, and then 20%, and then 0 is 0. Okay, so all supplies that fall within this must still be considered as taxable supplies. Now, who requires to register? Let's take an example. May is a sole trader. She makes a taxable supplies of 90,000. Does it exceed the threshold of 85? Does it? If it exceeds, she must. Mark owns 2 distinct companies, taxable turnovers 45 and 55, but we must aggregate it. Okay, so if we aggregate these two, we get 100,000. Compare it. Does it exceed the 85,000? If it exceeds, you have to register. Pat and Peter, they are a partnership. Their taxable supply is 60 per annum. Now, these two guys, their total figure we have does not exceed 85, so we cannot hold them. Peter also owns another business with taxable supply of this. Here, he stands alone. But again, this one doesn't exceed the 85. So you ask yourself, would you? Would you? PC Limited was owned by PNC. Annual turnover is 200,000. Does it exceed 85? If it exceeds, would you have to register? Okay. So the next slide gives us the answers. Like I said, May's own 90,000 exceed 85, so yes. Mark, when we aggregate it, is 100,000, it exceeds 85, so yes. Pat and Peter, when we aggregate them together as distinct persons, together it doesn't sum up to 85 or more than that. Peter has his own business standing alone. When we aggregate only per person, It doesn't also exceed 85, so no. PNC owned by two guys, PNC, the total amount of 200,000 exceeds this, so we must register. Okay, now compulsory registration applies in two scenarios. We have the historical test and then the future test. Historical test simply tries to tell us that if in the past, all our taxable supplies up to the 12 months, okay, up to 12 months exceeds 85,000, then it is compulsory for us to register. So the past period, historical period, up to 12 months, does it exceed 85 our supplies per month, per calendar month, okay? Any of the calendar months. So not strictly from January to December or from April to March. No, not strictly. Just count backwards and see any of the immediate previous 12 months period. If the turnover, taxable supplies or turnover exceeds 85,000, then it's compulsory. In future test also, if we are able to anticipate in the future, in the next 30 days, that our taxable supplies will exceed 85,000, then it is compulsory for us to register. Now, over here for historical, if we'll come back to it again, but let me just walk in here so that when we get there, it will be very quicker for us. If we have been able to anticipate, let's say from any time up to the past 12 months, so let's say up to let's say April, okay? Up to April, we realize that our figures will be less than 90,000. It exceeds the 85. Then we have 30 days to notify the HMRC. So by 30th May, we should have notified HMRC. Okay, we should have notified HMRC. And then we make sure that the first day of the next month, so by 1st June, we should have registered for the historical. Okay, for the historical. So up to the 12 months to April, we realize that yes, our taxable supplies is 90, it exceeds 85. We have up to 30 days from the end of the period that we have noted that our supplies will exceed the 85 to notify HMRC that we qualify to be registered for VAT. And then we must ensure that by the 1st of the next month, we would have already been registered. But for the 30-day future test, if I'm able to anticipate that today, 1st April, I'm able to anticipate that by 30th April, I'm going to be hitting an amount of 100,000, which exceeds the threshold of 85K. What is required is that between the 1st to 30th, I must notify HMRC. And also, in terms of registration, I should have registered by the beginning of the same month. Okay, it's quite interesting. Okay, so here you are anticipating. Therefore, you must take proactive steps to get registered. Okay, so again, it can be waived if you're able to prove to the HMRC that all the supplies you are going to get in the following month will be less than a deregistration limit. So take note carefully. Registration threshold is 85, but then deregistration is 83,000. Okay, 85 and 83. So if you're able to prove to them that your supplies or whatever you're going to be making, the turnover will be less than the registration limit, then HMRC can grant you that waiver. Now, let's continue with the compulsory. Like I mentioned, if for the purposes of registration, supplies of capital assets may be ignored, okay? Now, you have 30 days to notify HMRC in both scenarios. 30 days from the end of the relevant month, the month that the 85 is reached, okay? Now, registration would take effect at the end of the relevant month. Now, we are saying 1st of the next month, like I mentioned, for historical, okay? Unless future test, where you will be registered from the start of the 30 days. From the start of the 30 days. Both scenarios, we have 30 days to notify, okay? But for historical, 1st of the next month after the notification period, But for future tests, it should be at the start of the 30-day notification period. So an example, Paul started trading on 1st June 2018. Sales exclusive of VAT is 6,200 per month for the first 12 months and then 12,500 per month thereafter. What day should Paul be registered? Okay, so from 1st June 2018, every month he's going to be making 6,200 for the first 12 months. After that, it will increase. Now you realize that sales up to the first month, let's take a look. Sales up to the first, for the 12 months up to 31st May. Okay, up to 31st May, what do we get? Remember, it started from 1st June, okay? So 12 months from 1st June up to 31st May, what income would he get? 6,200 times 12, okay? 6,200 times 12. What does he get? Now, up to June again, it means that we are looking at the period July to June, which means it will be 6,200 times what? 11 plus the 12,500 that moves on thereafter, okay? And then let's consider again the next threshold. If this one doesn't exceed the threshold, we are considering this one. If this one also doesn't exceed the threshold, we'll consider the next one, the next 12 months up to 31st July. Okay, so again, you will get our 6,200 times 10, okay, and then plus 12,500 times 2. And then we consider all of this, okay. If it exceeds over here, if it exceeds, all things being equal, exceeds 85,000, we have to notify HMRC that we are liable for VAT registration by the 30th of which month? If this month, if 31st July is when we qualify, it means by 30th August, we should notify. And then we should make sure that by 1st of when? September, we would have registered. Historical, okay. Let's plug in the figures. I've just done the calculation, but let's look at the figures. Okay, so yes. So for the first 12 months, if we should use the 6,200 times 12, we're getting this. It's less than the threshold. The next 12 months, if you try the other approach as well, you will still get 8,700, which is below, okay? And then the next 12 months up to 31st July, we're getting 87, okay? You can do your computation and check. We get 85,000. It means we have to, it ended here. This was when we qualified. Therefore, we have 30 days. You must make sure 1 month after, 1 day, okay, the next day, immediate day after the 30-day notification period, we would have registered. Let's look at the future test, okay? Now, for a future test, let's say Constant Limited starts trading on 1st February 2019, okay? Sales, goods, A, standard rated 5,000 per month, and then B, zero rated of 2,000 per month. It doesn't matter whether it's standard rated of zero rated, okay, or reduced rated. So realize that from June onwards, the goods will now move. I mean, he's now making 8,000 per month and 2,000 per month. So for February, March, April, May, 4 months, okay? 4 months, he makes 7,000 each. So we're getting about 28,000 for the 4 months up to May. Now from June onwards, this alone is giving us 10,000. And then we have been told that on 1st June, can you see? He signed a contract to provide 50,000 worth of goods and 30,000 worth of goods B by 25th June, in addition to the normal sales. So he's already anticipating 30 plus 50 of 80,000, right? Added to this, we are getting 90K, which exceeds our threshold of 85K. So it tells you that if we've been able to anticipate, or we've signed this, in fact, we've signed a contract, so we are very sure we'll get this money, okay? So it means that at the beginning, you have 30 days from 1st June to notify HMRC, 30 days. But again, registration must start when? At the beginning. So by 1st June, again, you would have registered for future tests. Okay, for future tests. Again, let's look at the figures to confirm what I'm saying. So for the, you are making taxable supplies per month from 1st February of 7,000. Cumulatively, by the end of May, 4 months, you're getting 28,000. But from June, just for the month of June, you are making 10,000 plus the 80,000, which is 90, and this exceeds the threshold of 85. Therefore, you have to notify HMRC by 30th June. You must be registered by 1st June, the beginning of the notification period. Okay. Now, registration, once again, we normally do this online. Registration is done online where you pick the VAT Form 1. You may want to phone the office, but that's not enough. You have to actually fill in the forms online. And then on it, once everything is complete, the VAT office will issue with a certificate of registration. And at a minimum, it will show your VAT registration number, your date of registration, the end of the first VAT period, and then the length of VAT periods you will be liable for. Now, what happens if I am liable to register, but I fail to do so? You will still be considered a taxable person, and you'll be held liable for any tax that you need to pay, okay? Any output VAT, we'll come to this. This keyword has come up, but we'll look at it, output tax that you need to pay, okay? But it's not right for you to know that you are liable and you fail to do so. Ignorance of the law is no excuse. You have to be registered. Now, implications of registration. Now, there are 2 items I want us to consider here: VAT, input VAT, and output VAT. Now, we sell, okay? We sell outputs and we buy inputs, right? So they should guide us. So once you are selling, you are levying some VAT on it. Now, more or less, this is what I always say. So VAT works in this way. You, the taxable person, becomes like an agent for the HMRC. So you are collecting VAT, you are collecting taxes on behalf of the government, on behalf of the economy. And you must send it back to them, okay? You must remit it to them. So once we sell, you are selling 1,000 and you have added 200. So 1,200 to the customer. The customer has paid you 1,200. Your amount, what you need, was 1,000. You've collected 200 from the sale. This, you must give it back to the government, okay? So this is what we term the output VAT, or it could be zero. It could be zero rated. If zero, it will be zero, okay? Reduced rated, standard rated. So all VATs that we collect, we levy on invoices, on sales that we have made to customers, feed into output VAT. And this we must pay to the government. Any acquisitions, whether of goods or services, which we have bought, any implements. So we bought this from a company, let's say 100, and then he has applied a VAT of 20. So we paid him 120. In reality, we should have paid him 100, but he's collected 20. So we have suffered a VAT of 20. So for input VAT, we suffer, okay? But this one, the output VAT, is more or less some kind of gain, okay? Not really a gain because we pay it back to the government, okay? So it's not really a gain. We must always get rid of it from our sales figures and then give it back to the government. So you will suffer this input VAT, and then you have also gotten some amount as output VAT. At the end of the day, there is always a set-off. So if at the end of the day, let's say my output VAT is, let's say, 100,000, and then my input VAT is, let's say, 80,000. I have suffered 80,000. I have collected 100,000. HMRC will require you to subtract and get 20,000, and this is what you pay. This is what you must pay to the HMRC as VAT. Okay. Similarly, if my output VAT was 80,000, and then my input VAT is 100,000, then I must call for 20,000 as reclaim. I must reclaim this from the HMRC. Okay, good. Let's work. Let's move on. So what if the trader is exempt, has exempt supplies only? Exempt supplies like insurance or a crematorium, these are totally exempt. I mean, as it sounds. So they are not a taxable person. They cannot register for VAT. They cannot charge VAT, and they cannot recover any input VAT that they suffer. So it's a give and take. They cannot register. They can't charge. Okay. If they incur any input VAT suffered, it is on them to bear this. You are considered like a final consumer. So at the crematorium, they may buy some products for the burial services, but they cannot claim this input VAT. Okay, they cannot claim this input VAT. And again, when they are also rendering the services, it is not required of them to charge any output VAT on the services that they provide. Okay. Now, what if the person has a zero-rated supplies only? If you have a zero-rated supply, yes, you still be considered a taxable person. Okay, so a person is making taxable supplies and must register if he reaches the threshold, whether zero supplies or standard supplies or reduced. But of course, the taxable rate will be 0%. Okay, now if you have a taxable supplier whose outputs are zero rated, but inputs are standard rated. Okay, what do? Is there any output VAT? Outputs are zero rated, so output VAT will become zero. But would there be input VAT? Inputs are standard rated. They will become, yes, you charge something, 20% on it. Okay, so you only have to obtain repayments on the amount that you have suffered, because there's nothing you have to remit in terms of this output VAT. Okay, you only claim for what you've suffered, the input VAT. So voluntary registration is important. It helps you. There are some important, some positives, but again, there are some negatives. The advantages are that it helps you to claim input VAT. It helps you to keep your books in order, and it gives you credibility, okay, as an organization who is doing something right in the eyes of the law. The disadvantage is that there could be administrative charges or costs, and then also there could be some competitive disadvantages, and it could deter companies if customers are not VAT registered. Okay, so there could be some pros and cons here in terms of voluntary registration. Now you can deregister if you think your taxable supplies will be below 83,000 over the next year. You can deregister. Again, you need to notify the HMRC within 30 days, and then you deregister from the day that you cease to make those supplies. So whether you think you have to, when two conditions, when you think you cease making taxable supplies, okay, or when you think your taxable supplies will be below 83,000, you deregister and you get 30 days to give the notification, okay. There is usually a deemed supply of business assets such as plant equipment and trading inventory when a business ceases to be VAT registered. And in this case, output VAT, which cannot be collected, is when the value is less than £1,000. Okay. So, however, if the transfer is of a going concern to another VAT registered person, it will actually be outside the scope of VAT. We'll look at an example to illustrate this. So, exemption from registration. Again, if you are able to make a case that all your supplies are zero rated, you may be exempted from registration, because at the end of the day, if it's zero rated, what will you do? You still come back to zero. Okay, so HMRC can give you exemption from registration. So okay, something is happening to my screen. Okay, let's continue. Yep. Okay. Now, group registration, like I'm saying, two or more companies under the same control can register as VAT, as a group for VAT, and they must be resident in the UK. What is happening is that in this case, both of them will have to file a single VAT return, and they can claim only once as a group. The different parties within cannot be claiming differently or file differently. one representative must represent all members of the group and file. Okay. Any consequences will be borne by the group, not by the subsidiaries or by any subsidiary or the parents. It will be borne by the entire group. There is no need to account for VAT on any supplies that occur intra-group. So any intra-group VAT supplies will be exempted. Okay. So a typical example, let's look at another example. William began trading on 1st April. Selling standard rated supplies, his turnover for the first 14 months is given as this. When would he register? Easy, right? Easy. So looking at the historical, try to compute, add up the figures. Which ones will sum up to the 12 months? Which of the immediate 12 months, previous 12 months, will sum up to or sum up or exceed 85,000? It is at that point that he must register. So you can start making a simple calculation from year to year to year up to from April to March. Check and see, does it add up to 85 or more? If it doesn't, ignore this. And then 12 months up to April again. Does it add up? If it doesn't, ignore this. And then 12 months up to May. Check, does it add up? Okay, so if you take a typical example for the 12 months up to March, it doesn't sum up. But then up to April, it exceeds the threshold. Therefore, April 30th, he's got 30 days to notify HMRC. So up to 30th May, he should notify, but he must be registered by 1st June. Okay, so that is it typically. Registration will not be required if William could convince HMRC that his turnover for the 12 months to 30th April is not likely to exceed the deregistration threshold of 83,000. All right, excellent. Okay, so that is it. That is it. Take good note of that. It's very easy. We'll be looking at the other aspects in terms of the second part, which covers the chapter 30 of the text. Great. See you soon.